Good morning, traders. It's 8:01 a.m. Chicago time on a Wednesday, the 2nd of June, 2021. Thanks for joining me on episode number 2005 today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's get right into it. The Convergent Trading pre-market summary sheet shows a market posture that is neutral. We have had a run up in the last half hour to an hour, actually. And in it, we saw the market break above 4,200 and is currently trading the S&P above 4,200 and is currently trading at 4207. So it's still a neutral posture, generally a mixed market underlying, as you can see in the screenshot that was taken about 10 minutes ago here, and putting us in neutral posture today. Crude oil pushed above 70 for the first time today in about 2 years. There are some factors that are tying into that, but the key being what's listed in the event risk and economic events section down here. The key being that vaccinations across the globe are increasing. We still have some terrible numbers out of several places, Brazil, India, and so on. But the number of cases the number of people getting vaccinated is also increasing, and that is likely driving demand. So commodities, if you have not been aware, commodities have been ripping higher. If you look at copper, if you look at lumber, if you look at many inputs into manufacturing construction, there's been a huge bubble there, huge push, and of course that coincides with the dollar falling. And all of these are dollar denominated. And with the demand that's coming online from the globe, this is likely to continue that demand, and it's likely to cause inflation. So my point here being, we've got to pay particular attention to inflation, to anything about inflation, to what the Fed speakers are saying. And as you can see in the calendar here, we have Fed's Evans at 12. We have Fed's Harker at 12 Eastern. We have Fed's Bostic at 2. We have Fed's Kaplan at 6:05 p.m. Eastern, and so on and so forth. We've got to start paying a little more attention to what these guys are saying now. The market, at least the market will. And also, we have non-farm payrolls in 2 days on Friday, and we have Fed's Chair Powell commenting afterwards, and I think that's going to be very important. This is going to be not your run-of-the-mill non-farm payroll unemployment report. Very important to pay attention. What's on deck for today? For me, well, let's talk about crypto for a second. I've actually been trading crypto a little more, and I'm really a retail novice. Novice at trading. I'm doing it on Binance, and I'm sure there are better outlets. If anybody knows a lot about crypto, I'd love to buy a drink or something and figure this thing out. But it's getting a lot of my attention, and crypto is just kind of going sideways. The majors are going sideways, as well as the alts. Most of the alts, and you have ones popping up and down. But really, Bitcoin and Ether are going sideways and swinging in between, for Ether, between 3,000 and 2,000 or so, 2,200, and for Bitcoin around 40,000 to 30,000. And you know what? Bitcoin can cover 10,000 in about an hour. So be careful. I'm not advocating that you trade them, but this is the future, and I want to get on that train now, as it's already has momentum. For today, we're looking at IBD tip at 10. We have these Fed speakers. We have ECB's Lagarde. So if you're trading euro, if you're trading European products, pay attention to 1:10 p.m. Eastern time. We have the API crude oil stock change after the pit close at 4:30, and we have total vehicle sales at 7, and then Jibun Bank Services, and then tonight we have the Caixin Services PMI. See, I learned. I remember from yesterday. Caixin Services PMI. This is a major number out of China at 9:45 p.m. Eastern. Looking at market condition, it's been balanced all morning. Now it's breaking a little bit higher. 139,000 contracts traded. We've had 16 points, but we've pushed the overnight high now to 4208.75, so a little bit 2 points higher than what's shown on the summary sheet. So overall, 18 points of range, which is well within the norm. Again, the overnight stats, what we consider normal, is shown down here in terms of volume and range. So, 31 points is kind of what we're expecting over the last 252 days or 1 year of trading. And currently we have 18. The overnight inventory is at 6%, 6.5%, 7%, something like that. Not much to talk about. It is quite balanced coming in. However, as I said, we are pushing higher before the open, but overall we've balanced out pretty much the entire session. We'll look at that in a minute. Those of you who have not done so and have a Twitter account, please follow twitter.com/conv trading, CONV trading, to get this pre-market summary sheet at 8:50 a.m. every morning. And if you have questions about the glossary, about terms used here, go to ct.pro/glossary-terms. You can see that in the bottom right corner, the 2 URLs that you need to know. Let's take a look at what was expected yesterday versus what we got in the start of our review segment. The first thing, the first scenario was really just following a typical auction with the inventory being as high as it was. The inventory was around 86% or so. And the expectation is for it to pull back. And I expected the high of 42.10 to hold from Friday. But I expected it to pull back, and I indicated 42.10 here. And I expected it not to close the gap, and I expected a run at the high, 42.32 and a quarter, and then 42.38 and a quarter, and potentially push into the 42.75, 43, and potentially 45. That was the first scenario. Market had a completely different idea. The secondary scenario was a little more in play, although we saw a little more of an open rejection reversal, but was looking for it to break the 28 quarter high towards the 32.25 and then fall off. We're looking for an impulse on the open, and if we have an impulse on the open, then we're looking to target 42.10 and 04 being the big number down here. That is the MC point of control. Scenario 2 was in play yesterday pretty much right off the open. Here's our review segment. Again, the dashed lines, these dashed lines are the opening swing. Yesterday did not have a clean opening swing. We pushed up, we opened at 28.75, we pushed up 5 ticks, and then we had an impulse. This is what I draw with an arrow like this. This is a quick impulse down. That impulse was 9.75 points. It's not technically an impulse. Combining both segments of this, it is definitely an impulse, but this had driving behavior in it. You can see the delta was negative. This is where you come in and you say, I'm off the longs here. We're in a gap zone. You would expect a gap to backfill a little bit, maybe 50% of the gap zone or something like that, and then find the find the gap mid or some other area, and then base and then push higher. We call that a gap and go trade. Gap and go trade, in that case, you would only get long. You'd only hunt for the longs. Here we have a quick push, a little consolidation, which I used as the opening swing low, and then it broke that consolidation low down, and managed to have a pretty weak pullback to the full session VWAP. Full session VWAP before it broke to the other side. It pushed through, right through 4204, and went to 4201.75. 4201 was the low of Friday, and so one-time framing is threatened here, and then it pulls back to 4210. 4210. Sorry, I said 4210 for Friday's high is 4215. Pulls back to 4210, the point of control area of Friday, and then it breaks the IB low and consolidates. What we end up with is a B-shaped profile. B-shaped profile. This is long liquidation, a quick move away from higher prices and accepting lower prices. The market starts to go sideways, and so what we have is a base. What we do have down here, just a few ticks below, is a triple TPO low, a weak low from back here. And this area I expected to see a pullback to the IB and a push through. That did not work out. It ended up pushing higher and holding steady. And as soon as we opened, it broke down and took out that triple TPO low, that weak low, and then we ran up on the overnight session. So you could see that Delta moving with price again. It's nice to see Delta and price move together. Of course, we have rollover, official rollover next Thursday of next week. We have official rollover, and the Delta goes down the crapper, and volume gets manipulated because of the roll. At that point, we lose that information. But here's what we've done since we reopened. We reopened and we pushed all the way down to 41.90.75. Remember the triple TPO low right here at 94.25. We push through and come right back, consolidate. We hold steady through a figure here in the European session, and then we've created this top at 42.02, and we managed to break it in the last hour. And so we've pushed the overnight high through the 42.04 to 42.09. Remember the 10 above. And then and we're pulling back a little bit. The delta on the overnight session indicates complete balance, completely sideways, and not really going anywhere. And we're consolidating at the low end of yesterday's range. So if you look at yesterday, you have this region from 4210. Here's the low volume node at 4210. Remember this number. 4210, and then we have balance all the way down to yesterday's low at 95, and then we finally break lower at 91, and we're consolidating sideways. So we also left some single prints of 42.12.50. That's another area I'm seeing a fair amount of resistance above, and yesterday ended the one-time framing up on the daily. So let's take a look at that. Here's the composite. So we have this very wide-ranging week, pretty wide-ranging week. We have an inside week 2 weeks ago. We have a consolidating, highly compressed week last week. And, just look at how the range has collapsed from week to week. And then we finally break above, and that's what's driving. That's what was driving the primary scenario. We have a wide-ranging week, an inside week, and then we finally break higher on a consolidation week. Very, very high kurtosis or high concentration of volume. This week, of course, did not have as good a volume. Only 4.5 million contracts for the 5 days, so averaging less than a million. We're looking for 1.1 million contracts a day. Definitely influenced by the holiday. A pretty slow week, but we ended up breaking above that. We came in with the market opening above it, 42.28. It actually opened at 42.30-ish or so 29 or something. And then it becomes responsive and it goes right back to 42.04, which is the point of control from last week. And here we are, we're sitting on top of the point of control. That's the narrative. That's the story. We pushed above after a consolidation week and we came back into balance. And then last night, we tested a little bit below to 91 and we came back into balance. So what we have is so far the market just kind of not able to sustain prices above that 15, 16 area. Remember, it went to 30 and dropped right off. Did not challenge the high. And then last night we pushed through the low of 95 into 91 and we're back to 04. And so the market has tested higher, found sellers, tested below, found buyers overnight, and is holding in the middle. This is a balanced market. It is likely to be a choppy trade this morning. So make sure that you're not overcommitting on your trades. This is why we listen to the narrative, because it's telling us the story. If I zoom in here, you will see that guess what? Yesterday's point of control, boom, the red line is right on top of last week's red line. Last week's point of control, the MC point of control, and yesterday's point of control stacked on top of each other. It does not get more balancey than that. What this is saying is the market is really finding a sweet spot here between 42.10 all the way down to yesterday's low of 95. That's what's going on. And so a push through here would have to come with strong impulses and good volume and a break above 16 to start chewing through this thinner volume up here. And if it does, if it starts to push through that 15, 16 area, then the shorts are likely to puke them out and it becomes a short run and we're looking to get long to join them. But currently, am I enticed to take on a trade at the open given current conditions? Heck no, it's not really out of balance. And as long as the market's not out of balance, you have short time frame traders being active. You have long time frame traders waiting for whatever signal they're waiting for. And do I want to compete and battle it out with short time frame traders? Not really, unless I can find an edge where some of them are likely to be wrong. I'm not going to sit here on top of last week's MC point of control, yesterday's point of control, and play this whack-a-mole game, right? Where does it go up? Okay, let me fade this, let me fade that. So I'm warning you, coming into today's session, to temper your expectations. If we open and it immediately runs away, this is a good condition because now we have this volume that can fuel a sustained push. So balance leads to imbalance. Imbalance is looking for balance, and then it chops around, and that's how we get these flag formations and things like that. So the market is standing by. It's in a holding pattern. It is assessing and absorbing all of the information that it's got, but what it's saying is it is sweet on 42.04. It likes 42.04, and before that, it liked 41.55. That is the MC point of control since the beginning of April, which, by the way, let's not lose sight of what we've done since the beginning of April. Here's the first day of the month, the first day of April right here. First day of April breaks higher. The second day of April, we have a gap up, and then we consolidate for a little bit, and so we start this MC, and we're carrying this MC all the way through April, May, beginning of June. We haven't accomplished very much in the last month. We have traded less than 200 points, not the last month, the last 2 months, 2 months and a week. We have basically traded in a 200-point range, less than 200-point range during this whole time. And remember, in general, we're looking for about 58 points a week. we're looking for about 200 points a month, 200 and a little over 230 points a month in terms of range. And we've spent the last 2 months and a week in a sub 200 point range in a day session. This is to just bring you back to reality and put things in perspective. And what do we have? We're sitting above the point of control of this this entire cluster of balance, but we're sitting on top of the most recent point of control given last week and yesterday. Again, I want to put it all in perspective for you. That's what I'm here for. So I'm not going to show you Edge Pro X today. There really isn't much to glean. Again, we're looking at a market that is resting and is sideways, and you just need to be aware of that and take that under advisement and set your expectations accordingly. Okay, we have a big event on Friday. We have a big secondary event on Friday with the Fed speaker, and so we're the market's kind of holding tight. Did you know that imports into India of gold are up over 800% year over year? It's insane. Very interesting tidbits of news that I get. I got that, I think, from the Wall Street Journal. Here's where we are today. So what we have above us, we have this 10 area. We've got this 15 to 17 area, which is basically the last frontier of defense for sellers. Below us, we have this 94 area. Okay, the big area down below, of course, is 55, 155. That's the big balance area. If we break away from here to the downside, we'd be targeting 155, and then above here, we would get into the 32 quarter, and then I can't write this morning on the screen, and then above there is 40, 38 quarter being the all-time, all sessions high. So what are we looking at for today? Open auction, respond, come back into the 4204, test the 4200. The point of control is at the 4200. We closed at 4200 yesterday. Test that, dip below probably into the 98, 99, not expecting it to breach 94, and then come back up and try to make an attempt at the 10, expecting this to be a relatively quiet day. So test the 10, test the 15 potentially. Down here, test the 98, 99 area, all the way down to 94 as indicated. Okay, so a lot of drifting today is expected. What I'd love to see today is a market that opens and just rips in one direction or another. The secondary scenario is a response back into where we were in the overnight session, 4204, that gives us an impulse higher, pushes to 4210, challenges, and then pushes through the 17, and now we're free to test the 32 once again. Very unlikely, but there it is. And then the third scenario is a break, is the opposite, open, test up, drive down. So open, breach 4209 for the overnight stat, drive down, consolidate here in the 94, whatever, and break free for a run at 75, and then a bounce later in the session. These are the three main scenarios, but just know the market is opening in balance. The market is opening in balance, and there's no way for me to know what's going to happen, but drawing a map on the screen helps me understand what is key, what areas are likely to be challenged, what areas to aim for. And in general, if you don't come in with a plan at all, if you come in saying, well, I'll see what happens, then you're just, I believe, and I've seen that you're just going to join the large heap of history of people who hold on to losses, cut winners short, and there's generally no idea of what the key areas are that we're holding for, that the market's wanting to test. Remember, all we want is to catch a wave and ride it to the next big area. It's kind of like a bus service where you don't have a schedule, you don't have a timetable, you don't have a route, but you know what the key milestones in the city, and a bus comes along, you jump on, and your goal is to catch it to the next big milestone, so you can find your next ride. We don't get to dictate what the market does, not with lines on a map. But the idea is that we come in here with some sort of a plan, and if you don't like it, hey, don't tune in, don't listen. Do it your way, that's fine. But for me, understanding that the market's on top of 4204 coming into this morning's session tells me to just back down, chill, and wait for the market to set up. Good luck today, and I'll catch you tomorrow morning. Take care.